Hello students, after a long time we are meeting, especially BNU students. After we had preparation for first semester BCom, then we promised you that we would like to get you chapter wise subjects of core subjects in second semester. With that, today we are starting with advanced financial accounting, right, as per the NEP syllabus. You have 4-5 chapters: consignment, joint ventures, royalty, then conversion of a partnership into joint stock company. Everything is there. Let us start with what actually consignment accounts theory part in this video. Then later on you will get problems and solutions, then how to work out consignment accounts. So if you have not what actually subscribe for this channel, kindly subscribe and share among your friends, right? So here I am going to get you today the meaning of first consignment. Consignment means sending goods to another person. It is a trading arrangement in which a seller sends goods to a buyer or reseller who sells the goods on behalf of the sender according to instructions and pays the seller only as and when the goods are sold. The seller remains the owner, that is the holder of the goods, until they are paid for in full, and after a certain period takes back the unsold stock consignment, and deals are made on a variety of products such as artwork, clothing, accessories and books. It's very simple. Don't think that it is only tough. I'll get you a very simple example. What is consignment? So assuming that you are producing a product in Bangalore, right? It has got a great demand in Mysore, where you will have one agent, right, in Mysore, or you have one friend in Mysore. Then what you will do? You will send the goods to that person, to your friend. Your friend will sell on behalf of you, right? He is not going to buy the goods, he is going to transfer the goods, and where you are going to, that your friend is going to sell the goods on behalf of you. For that you are going to get him what actually commission. So that type of relationship between the two parties is called as what you mean by consignment. That means here ownership will not be transferred from the producer to the what you call the agent or what you call your friend, right? Because unless he buys, he cannot resell. So that is a tough job. For that sake, you have one more type of what you call account. That account is called as what actually consignment, right? So consignment is where he is going to send the goods to the another person, where you have demand to that area, you are going to send on behalf of you, though that person is going to sell, right? Then what are the features or characteristics of consignment? The person one who sends the goods on consignment is called consignor. That means assuming that you are producing the goods, you are sending the goods to your friend, means you are called as what actually consignor, and the person to whom goods are sent on consignment is called consignee. That means the person one who receives, that your friend he receives, is called as what actually consignee. That means the person who sends the goods is called consignor. The person one who receives the goods is called as consignee. Consignee will sell on behalf of you, that is consignor. The relationship between consignor and consignee is that of principal and agent. It is very simple. Consignor is called as principal, consignee is called as agent. So it is the relationship between principal and agent. It is not a partnership. It is not a partnership. It is called as what I say, the relationship between principal and agent. So agent will sell only on behalf of the principal. So it is very simple that the agent is not going to buy the goods. He takes the what actually transfer of the goods, but sells the goods on behalf of principal. The main objective of sending goods to the consignee by the consignor is to sell the goods, which results in earning profit. So I told you, you have a great demand in other town where you have produced in the here. Then what you have to do is you have to request somebody and you have to appoint somebody, so that person will sell. So place of production is different from place of what actually selling. Even here also you may sell, but still you have a demand there, but you don't want to have a partnership or anything like that, then you will have what actually the consignment accounts. Next feature, all the unsold stock at the end of the remaining with the consignee purely belongs to the consignee. I told you, the ownership will not be transferred. The ownership will not be transferred. So that means if he has not sold any goods, that remains what actually they with what actually the consignee only, but that belongs to whom? That belongs to once again consignor only. All the unsold stock at the remaining with the consignee purely belongs to the consignee. A pro forma invoice is prepared by the consignor which is sent to the consignee when the goods are sent. So a pro forma invoice is not a regular invoice. It is an invoice like an invoice, but it is not the actual sales. Actual sales when takes, it is called as invoice. When it is for the purpose of that, how you should sell, what quantity is there, what price it should be sold, right? Then it is going to be sold. It is called as pro forma invoice. An account sale, a periodical report giving the details of the goods sold, is prepared by the consignee and sent to the consignor. Often and often, of course, the consignee has to send to the consignor what the sales has taken place and how he has sold. For that, he is going to prepare one account. That account is called as what actually account sales. That will be prepared by whom? That will be prepared by the consignee. Consignment results in forwarding the goods from one person to another person for an agreed commission. So of course in this world nobody will do the job freely, right? So when he is doing the job on behalf of you, then you have to pay him some commission for the purpose of selling the goods, right? Then commission will be payable to consignee. The consignee is eligible to receive all expenses incurred on the consignment of goods from the consignor. Good. Say the consignee is eligible to receive all expenses because he is not partner. He is only an agent. So whatever the expenses that he is going to what actually bore, that should be borne by whom? By the consignor, right? So the consignment deed is an agreement between the consignor and the consignee. Of course, without agreement you cannot do anything. So the agreement is only for particular time, right? Then that agreement between consignor and consignee must be there. In case of goods lost by the consignee, as per consignment deed, the loss is borne by the consignor. That means deed whatever it says, say anything is lost, then that should be loss should be borne by whom? By the consignor. So consignor what actually responsibility is high. So it is the question of trust that how he is going to what actually do his work. So these are the characteristics or features of consignment. So here I have given you a small what you call one chart, parties of the consignment, that is consignee, consignor. You can say it is called as what actually principal and agent, right? I have already explained you consignee. In a contract of carriage, a consignee is a person or entity, usually a buyer named by the consignor, usually a seller. In transportation documents, as such party to whose order a consignment is delivered at the destination. The consignee is financially responsible for the receipt of shipment. The consignee is considered to the owner of the consignment for the purpose of filing the customs declaration and for paying duties and taxes. Formal ownership of the consignment, however, transfers in the consignee only upon payment of the seller's invoice in full. So he has to take that full responsibility. Then that person is called as what actually? Consignee. Consignor, usually the seller, is a person or firm in contract of carriage who delivers the consignment to a carrier for transportation, it whether by land, sea or air, to consignee, usually the buyer, named in the transportation documents. Ownership title of the goods remains with the consignor until the consignee pays for in the full. So some carriers such as national postal entities use the term sender or shipper, but the event legal dispute, the proper and technical term consignor will be the generally used. It is all only one thing is from the technical point of view you have to understand. Say if you understand what is who is consignee, who is consignor, you say that principal and agent, right? Next, the difference is distinction between consignment and ordinary sales. Say what is the difference between consignment and ordinary sales? Say here I have given you nature of difference, consignment and ordinary sales. Transfer of ownership. The legal ownership of the goods is not transferred to the consignee, but it remains with the consignor till the goods consigned are sold by the consignee. The legal ownership of the goods is sold passes immediately to the buyer of the goods. Here it will not be transferred from consignor to consignee, but here the ownership will be immediately transferred. That is in case of ordinary sales. Relationship. The relationship between the consignor and consignee is the principal and agent, and the relationship is continued till terminated. It is because the consignee is to sell the goods on behalf of consignor. The relationship between the seller and the buyer goods is that of creditor and debtor. The relationship is terminated as soon as the goods are delivered and payment is made. So here immediately it will be terminated, but here in case of consignment the relationship will be for some time. Expenses after delivery. The expenses incurred by the consignor to send the goods to the consignee and the expenses incurred by the consignee to execute sale, both are borne by the consignor. You can easily say that both the consignor expenses borne by the consignor. Any expenses incurred after the sale of goods is not borne by the seller. He is not going to take any responsibility. It is the question of what actually the buyer. Then risk of damage. The risk of damage of goods under consignment is always with the consignor because consignee holds the goods at the risk of consignor. That means consignee will not take any risk, right? He gets only what actually commission. Ownership is not transferred. That means risk also in the hands of consignor. When the sale is made, the risk damage is transferred to the buyer. Once sale is over, then in the ordinary sales, everything is transferred to the buyer only. Return of goods. Consignee can return the goods, unsold goods to the consignor, since those are properties of consignor, right? So he can return the goods immediately. That is because it remains with the what actually consignor only. Property means ownership. Whereas in case of return of goods, that is in case of ordinary sales, a buyer cannot return goods unless the goods are found defective or damaged or seller agrees to. That means you should have a condition, say any damaged, that will be what actually replaced, right? Say when such a thing is there, then you can. Otherwise simply you cannot return. Here unsold goods, immediately the consignee can what actually return it, right? Account sale. For giving periodical details about the goods sold and expenses incurred by the consignee, he sends the account sales to consignor. That means he is going to say how much goods he received, what is the expenses incurred, then what is the amount that he has sold, then how much is remaining, that is account sale. The buyer need not submit any account sale to the seller because here the relationship is buyer and seller. Here the relationship is principal and agent. Unsold stock. The unsold stock with the consignee will be treated as a stock of the consignor. So it is not the stock of the consignee because he has not purchased. In case of sale, the buyer's unsold stock do not attract the seller. Once it is sold, it is sold. Now that is his property. Commission. Commission is the main consideration of consignment. The consignee performs the selling activity only for the commission. So he does what? That he has done his duty, that is selling the goods on behalf of consignor. For that he is going to get agreed commission, 5%, 2%, 7%, right? Whatever it is agreed in the deed. Profit is the main consideration of sales. So here commission, here in case of sales it is profit. Forwarding document. Forwarding document is pro forma invoice. It is just in the nature of memorandum. Forwarding document is invoice. Say here we call that what do you mean by actual sale has not taken place. That is why I told you earlier it is pro forma invoice, whereas here it is what actually invoice. The invoice means it is regular sale. Next, try to understand few terminologies in consignment account. I have already explained you pro forma invoice. A pro forma is a document prepared by the consignor while goods are consigned to consignee, detailing the name of the firm, number of items, quantity, weight or measurement and the price at which the goods to be sold. It is forwarding a letter for consigned goods indicating the prices at or above the consignee has to sell the goods. Since the consignment is not a sale and the consignee is no longer the buyer, the forwarding letter sent along with the consignment is meant only for his information. As the consignment is not a sale, the forwarding letter is a substitute of sales invoice, but it is drawn up in the form of an invoice and termed as pro forma invoice. So, they have given you one small pro forma invoice also for your reference. You can say pro forma invoice, Mr. N Books, phone number, new addition, customer, invoice, XYZ Road, Bangalore, right, where it has been given the quantity rate amount and the quantity rate amount. Then if any discount is there, give that discount. Then packaging and carriage, right, then total thousands what I have to write. Then E and OE, errors and omissions are accepted, right. Then sales manager, this is called as what we mean by specimen of a pro forma invoice, right, pro forma invoice, right. Now, I have given you that is the invoice words E and OE stands for errors and omissions accepted. I have already told you. Second point is consignment inward. When goods are dispatched by the consignor to the consignee, it is a consignment inward from the consignee's point of view. Consignment outward. When goods are dispatched from the consignor to the consignee, it is consignment outward from the consignor's point of view. Inward from consignee point of view, outward from consignor's point of view. Consignment stock. Consignment stock is a stock legally owned by the one party but held by the another. Consignor is the owner, whereas it is held by whom actually? It is with the consignee. Therefore, the risk and rewards regarding the said stock remains with the first party. The first party is none other than consignor, while the second party is responsible for distribution or retail operations. Goods in transit. It is very simple. What is transit? Anything is on the way is called as transit. Assuming that you have left the college, still you have not reached home, that means you are in transit. Very simple. The same thing, goods in transit. Goods in transit refers to the merchandise and other inventory items that have been shipped by the seller or consignor but have not yet been received by the purchaser or consignee. That means it is on its way, which is called as what actually transit. Stock reserve. What is stock reserve? Stock reserve comes into the books in case of goods are sent to the branches or consignee at a price higher than the cost price. Example, goods costing rupees 100 are invoice, pro forma invoice, to a branch at rupees 125. That means it has been given as what actually 100 rupees is the cost, but you are supposed to sell it how much actually? 125. So, difference between the 100 and 125 is 25. That 25 is called as what actually stock reserve, right? So, and this stock remains unsold the time of closing of books. Now, the value of this stock should be converted to cost price. Always you are supposed to convert what actually is the cost price only, not for selling price or what invoice price or for pro forma invoice price. For showing it in the balance sheet. This means we need to remove the unrealized profit, that is 25 from stock. I told you 125 minus 100 is 25. Commission. Commission refers to the remuneration to the consignee by the consignor for the services rendered by the consignee in selling the goods consigned. Generally, commission is calculated on total sales made by the consignee. Total sales include cash sales as well as credit sales. He may sell the goods either on cash or credit, or both cash and credit. That all depends the agreement between the consignor and consignee. For that he is going to get commission, right? So now we have types of commission. Ordinary commission. Ordinary commission refers to the commission paid by the consignor to the consignee when the consignee is not responsible for any bad debt. Usually ordinary commission is calculated as a fixed percentage on total sales made by the consignee. Assuming that, what is bad debt? Say bad debt comes only when you are selling the goods on credit and you are taking the responsibility of collecting the amount. If that person doesn't pay, then it is your responsibility. For that he is going to get extra commission. That extra commission is not there, only I am going to get to normal commission. That commission is called as ordinary commission. Let me clear you. Assuming that ordinary commission is 5%, extra another commission is 3%. That 3% is to take the responsibility of bad debts. So that 5 plus 3 it becomes 8. But if I am going to only ordinary commission, means that you are not going to take any responsibility of the bad debts. That commission is called as ordinary commission. What is del creditor commission? Del creditor commission refers to the commission paid to the consignee when he is responsible for the bad debts incurred out of credit sales made by the consignee. I told you that 5% plus 3%. If you are getting only 5%, no other remuneration, you are not going to take responsibility of bad debts. 5 plus 3, that you are getting extra 3%. That 3% is called as del creditor commission. That means you are going to take the responsibility of bad debts, right? Now overriding commission. Overriding commission refers to an extra commission allowed by the consignor to the consignee to promote sales at a higher price than specified or to encourage the consignee. Say earlier I have told you in the pro forma invoice, that is a stock reserve, 100 rupees and 125. You are extraordinary person, assuming that you are going to sell at 130 rupees. 125 are supposed to sell, but you are going to sell for 130 rupees. That means 5 rupees more than the specified amount. For that, what you are going to get commission, that is called as what actually overriding commission. That is to put hard work in introducing a new product in the market. Overriding commission is paid on the surplus realized by the consignment on the consignment. So that means 125 you have sold for 130, extra is 5 rupees. For that you are going to get extra commission. That commission is called as overriding commission. Now consignment expenses. Consignor and consignee have to incur the expenses for dispatching and selling the goods on consignment. These expenses or consignment are of two types: recurring expenses and non-recurring expenses. Usually we will call it recurring and what is recurring, what is non-recurring. Recurring means often and often it happens is called as recurring. So let me get you one simple example. When you say rent, you have to pay rent every time. Assuming you have to pay what do you call one thing, it is called as bank charges, something like that. Then it is not what actually recurring expenses, then it becomes what actually non-recurring expenses. So one time expense is called as non-recurring. Continuous expense is called as what? Recurring expenses, right? So all those expenses incurred by the consignor and the consignee on regular intervals which do not increase the value of goods are called recurring expenses. The recurring expenses are also known as indirect expenses. Usually these expenses are incurred after the goods have been reached the place of consignee. So I have given the list: recurring expenses of the consignor, recurring expense of consignee, expenses of goods returned by the consignee, bank charges for discounting bills, collection of draft, checks, etc. received by the consignee. Whereas consignee is godown rent, storage charges, insurance of godown, office and administration expenses, selling and distribution expenses like advertising, salary of salesmen, etc., brokerage, expenses on goods returned, goods damaged, commission on sales. All these things are recurring expenses. What is non-recurring expenses? All those expenses incurred for dispatching the goods from the premises of consignor to the premises of consignee are called as non-recurring expenses. Non-recurring expenses are also known as direct expenses. So recurring expenses are called as indirect expenses. Non-recurring expenses are called as direct expenses. These direct expenses are incurred only once on a particular consignment, that is at the time of sending the consignment. Hence, they are called as non-recurring expenses. Right? So, these are the differences, or what you call different types of terminologies with that we have under what actually consignment. So, students, try to understand this part, consignment theory, properly, right? We are going to work out problems, some simple problems to what actually all complicated problems, right, from the examination point of view from the next video onwards, right? Once again, I request you, those who have not subscribed for this channel, kindly subscribe and share among your friends. Thank you.